From the land of Grant University in Urbana-Champaign, Illinois, this is the closing market report for the first day of July 2024. I'm Extinction's Todd Gleason. Coming up, we'll talk about the commodity markets with agmarket.net's Curt Kimmel. Hear from Ed Ossett at the University of Minnesota. He's an agricultural economist there. Discuss the June USDA Hogs and Pigs report and take up the weather forecast, too. We'll do that one with Mark Russo at EverStream Analytics on this Monday edition of the Closing Market Report from Illinois Public Media.
Todd Gleason services are made available to WILL by University of Illinois Extension.
July corn for the day settled at $3.98 1/4, a penny lower. September at $4.07, down a half. December at $4.20 1/2, down a quarter. July beans up 9 at $11.59 1/2. November at $11.11, up 7. Bean meal $5.20 higher. The bean oil up $2.06. Wheat futures up 15 3/4 cents for the July soft red. December there up 15 1/2. It settled at $6.12 1/2, and the July hard red up 15 1/4 at $6.02 3/4. Live cattle futures finished at $184.27 1/2, down $1.15. Feeders were $1.92 1/2 lower, and lean hogs were off $1.32 1/2 at $88.17 1/2. We're now joined by Curt Kimmel. He's at agmarket.net to discuss the numbers for the day, USDA's reports on Friday, and what prospects look like going forward. Hi, Curt. Thanks for being with us. Rough day on Friday. I take it you managed to make it through.
Oh yeah, it was a Grant, you're at one of those reports that there's just caboose. There we go. There were several studies showing that grain stocks report corn could be as much as 20 cents lower, but I ignored those estimates and kind of kept the nose to the grindstone there. But you think now we're hopefully got a chunk of that priced in. Today, corn futures just kind of steady, beans up a little bit, and wheat on fire here. Hopefully that sets the stage here to have some type of recovery. But when you factor in the report, ample supplies of old crop and potentially decent weather here, it's going to be hard to get much of an up and through here, particularly if it keeps following the charts that analysts have been pointed out from 2014. That particular fall in 14, corn was clear down to 318 and beans down in the 9. So it kind of suggests the commodity funds are wanting to trade that report. As far as those old charts back then, from the standpoint that they continue to pile on the shorts. The funds are estimated to be over 300,000 contracts short on December in the corn market, and this is the earliest they've had that big of a short position, particularly this time of year during the growing season, Todd.
Let's talk about something a little brighter. Soybeans were higher. Was that following news for palm oil?
I think that was part of the catalyst, yes. And it's been the short leg of the spread. Commodity funds maybe a little bit too short there, needed to cover that. Then there's some also, when you look at crude oil sharply higher today, that spilled into it. And they unwound some of those spreads earlier in the day, buying oil and selling beans. But it hit some went above some downtrend lines, and it just continued to fuel on itself just all at once. Now, the key or question is in the bean oil if it's going to actually follow through here. Plus, crush is huge. I mean, we're looking at the census crush report, following up on the NOPA crush report here, and seeing some good numbers there. Also, too, you mentioned the wheat. Wheat's in a position here where the yields in France are pretty poor. They've been too wet. And then we're seeing the Black Sea area continue to stay fairly dry. But we're starting to see end-user pricing come in. This afternoon's wheat harvest progress is expected to be about 54% complete as a nation. But with the carry in the market, I think that they're going to continue to try to buy some cash wheat here and store it and hedge it on out a ways in through there. One thing to remember with this wheat harvest coming on, we're going to have ample feed grain supplies, not only here in the U.S., but around the world.
If you look back at those 2020 14 charts, what did what did both wheat and soybeans do as corn was bottoming?
I don't have the 14 wheat, but when you follow that, it did not bottom until you got into the fall there. And just after the grain stocks report, it trended lower for about another week. You had just a little bit of a bounce, give everybody hope, take it away. So it's definitely got a trend that just continues to eat away at you if you want the market to go higher.
And then you did mention that soybeans ran towards that $9 level. Given all of this, what is it that you've been hearing from producers about the conditions of their crop across the Midwest? And then what kinds of questions are they asking you as it's related to new crop?
As far as conditions go, my crop's pretty good, but my neighbor, he put it in too wet. But we're getting to the point now that a lot of comments, it's looking fairly good. We need a drink, and there's some moisture in the forecast here. Still kind of rough. We've got wide variations from, knee high to chest high to tasseling. But guys traveling across the Midwest, they continue to report back, particularly in northern Iowa, southern Minnesota, and the Dakotas. It's pretty rough. Just, continues to see too much moisture. This afternoon's crop conditions report, it's all over the place, but the average trade gas is 68% good to excellent corn versus 69% last week. Soybeans, 66% good to excellent versus 67% last week. So we'll see what those numbers are. As far as questions, we've got questions all over the place. Surprisingly, still a lot of old crop corn. The guys want to know about getting it moved. They're going to have to move it here to make room for the new crop here. The new crop grain, very little priced. Visiting with the commercial division, they're only talking, they've booked 10%. Most has been kind of frozen their tracks in here. See if there's some opportunity here to see recovery. So we're going to not only have to deal with the wheat being around, but with the record or near record low amount of new crop that's been sold, there's going to be a lot of grain around here this fall.
I believe I asked this last week, but does the July 4 holiday matter?
Well, I think the schedule is we got full day Wednesday, no grade trade Wednesday night, and Thursday's off, and we'll resume trade Friday morning at 8:30. And I've heard you did ask that before. I've been giving that much thought, and with the computers today, they don't take vacations anymore. So I don't know if it really matters when you deal with computers or against a commodity fund that has a staff that trades 24 hours a day. It has billions of dollars to invest.
All right. Hey, thank you much.
All right. Take care.
That, of course, is agmarket.net's Curt Kimmel joins us here on the Closing Market Report each and every Monday afternoon. USDA has released the June hogs and pigs report. The report showed inventories about the same as last month and last year. It's more of the same, really, says Western Illinois University agricultural economist Jason Franken, with productivity gains offsetting farrowing cuts.
Overall, the number of hogs weighing less than 180 pounds is about 1.5% larger than a year ago, which will be the market hogs arriving at processing plants from July through November. The year-over-year increase in lighter weight hogs partly reflects the larger March through May pig crop, which itself results from a continued trend of growth in pigs per litter, here 1.75% higher than a year ago, outpacing reductions to farrowings at just 0.1% lower.
USDA shows the summer and fall farrowing intentions are down about 2.5% and 0.5%, respectively, from actual farrowings last year, which suggests to Franken that hog producers are showing some restraint from expansion. However, he notes that while lower farrowing intentions historically would imply somewhat smaller slaughter numbers in the future, to what degree depends a great deal on the pigs saved per litter or that productivity gain, which has been offsetting the lower farrowing intentions. Now, from the consumer side, the USDA June forecast shows U.S. per capita pork consumption at 50.6 pounds per person per year in 2024, with an expectation this will fall by 0.3 of a pound for the calendar year 2025. This, Franken says, reflects continued concerns for consumer purchasing power in the face of inflation, the availability of pork, and, of course, strong export demand. On that note, the U.S. exported 656 million pounds of pork in the month of April, or about 13% more than April of 2023. 38% of that went to Mexico. That's a 30% year-over-year increase, reflecting low bone-in ham prices and the strength of the peso. You're listening, of course, to the Closing Market Report from Illinois Public Media. Our theme music is written, performed, and produced in courtesy of Logan County, Illinois farmer Tim Gleason. You may find and listen to this program and our other programming anytime you'd like on our website at willag.org, willag.org. There you'll also find information from the agricultural economist, the crop scientist, and the animal scientist from right here on the Urbana-Champaign campus of the University of Illinois. On this Monday, as he does once a month, Ed Ussett now joins us to take a look at the commodity markets. I think we'll start, Ed, today with the conditions on the ground in Minnesota. Is there any indication officially from the university about the size of the potential losses there, particularly for the corn crop?
I have no official, survey where we can put a number on acres damaged and how much is drowned out and how much will not harvested. Rainfall, I was reading a person who is in the Mankato, Blue Earth, Fairmont, Jackson. This is south central to southwest Minnesota, noting that those areas have had over 25 inches of rain this spring. A normal year is 26 inches. Tremendous amounts of rain in parts of eastern, particularly southeastern South Dakota. I heard of Canton, South Dakota, which is right on the border of Iowa, a little bit south of southwestern Minnesota. 18 inches, I believe, a week ago in one day. And this is backyarditis at its best. We're watching these markets get the idea that crop is going to be a huge one. But from my vantage point here in Minnesota, it doesn't look that at all. But it's just Minnesota.
So I have a secondary question for you. This is related to last week's grain stocks figures. It showed on-farm storage across the United States 37% greater than last year. I know that's only an indication of one year to the next, but in general, farmers have stored a great deal of corn on farm. You have a rule of thumb, says thou shalt not carry into July. Here we are on the first day. What are your fears?
Well, my fear is we're at low prices for the entire year as we come upon July 1. Here we are. Values are as low as they've been all year, as low as they've been for quite some time. Mash corn prices under $3.70 in southwestern Minnesota. 60 cents, 70 cents off their highs of just 6 weeks ago, 7 weeks ago. Soybean prices under $10.70 a bushel, and good grief, over $1 higher in early May. It's not good stuff. What's going on? This 11th commandment of grain marketing: thou shalt not hold unpriced grain beyond July 1. You got two things happening here, or two things that tend to happen. You've got new crop futures have a tendency to decline from spring to fall in both corn and soybeans. It's not a certainty, but it's pretty strong, a strong tendency in corn, a pretty strong tendency in soybeans. The other thing is the basis tends to bring to fall. And here's the funny thing: all that grain out there, and the basis at ethanol plants in Minnesota is very strong. I see ethanol plants bidding 15 to 25 over the September That's an incredible bid. Elevators are 60 cents less than that. There are strong bids at the soybean crushing plants. Looking ahead to 15 over the August contract, the elevators are 60, 70, 80 cents less than that. It tells me when they're that strong bidding for nearby, the crush plants and the ethanol plants, these producers who are holding their grain are holding it very strong. They're going to be stubborn about this. And I'm very concerned that this could end with even a worse bang as the basis gets up late in the crop year and this grain is simply forced to come out.
Well, I was wondering about that, thinking about all the grain in storage here in the United States, which if it had been on the ground last fall, when we used to have a lot of ground piles rather than bins on homes, it would come into the marketplace and oftentimes be called a second harvest. Mm-hmm. And that reminded me that there is a second crop corn coming out of Brazil. And it actually will come into the marketplace about the same time that farmers will really have to make a decision as to whether or not they're going to empty those bins out or not.
Yeah, you're just starting to depress me, Todd. This is not a confluence of great events. I'm just very concerned. Producers will be, many are going to be to empty those bins because they need them for next year's crop. That could lighten up on the basis side of this equipment. The boards already have the basis could follow through in the next, put it out into August, early September. It could happen.
Any advice for them?
Sell rallies, hope for a rally, and sell rallies. I'm sort of proud of myself that back in the May rally, I was telling people to sit up and pay attention here. This is we've been waiting all calendar year for the rally. Here it is. Get something done. Clean up some old crop issues. Well, that rally is faded sharply. We have to hope for another one. And what we'll do, not sure, but if we get it, jump on it.
For new crop, have you any other thoughts as it's related either to corn or soybean?
I don't chase it lower. I recall telling someone here a month ago when December corn was 460, 470, 480, closing in on kind of dollars, and telling people, look, if conditions are right, I could see new crop corn at 420 or 430 December corn. That's where we are. We're at 420 right now. It sure didn't take long to get there. We're looking for rallies again. I'm not going to chase it lower this time, but I'm on point for a rally.
Hey, thank you much. I appreciate it.
Thank you. And let's hope things dry up and heat up a bit here in the North Country. We need a little heat to go with drier weather.
On that note, I pulled up the places that I track and rainfall, since you mentioned how much rain had fallen in parts of particularly the southwestern part of Minnesota. In Worthington, this is the place I track that has had the most rainfall. At this time of year, they usually have, year-to-date, 17 inches of rainfall. They've had 32. Here's the kicker. Since April the 22nd, they have had 25 inches. Just an inordinate amount of rain.
Yeah, inordinate. Yep.
All right. Yep. We'll talk with you again next month. That, of course, is Ed Ussid, agricultural economist at the University of Minnesota. On this Monday, let's check the weather forecast with Mark Russo. He's at EverStream Analytics. Hi, Mark. What a beautiful day it is here in the Midwest. Will there be more to come, particularly in the northwestern corner of the Corn Belt? And are they having as nice a day as we are? Because they've been awful wet and they've been cool as well.
Yeah, Todd, looking ahead here for this week and even on into next week, temperatures will be generally seasonal. A couple of warmer days, couple of cooler days, at least the more anomalous cooler weather of the past few days. That is beginning to ease a little bit here. But nonetheless, we're just not seeing any kind of, again, extreme heat building in through these first 2 weeks of July. And as for rainfall prospects, it still looks like that northwestern portion of the Corn Belt will be a bit on the wetter side, although we're not seeing a repeat of what happened a little over a week ago with the extreme totals there in southwest Minnesota, northwest Iowa. But there will continue to be some rain activity, especially over the next several days, where there will be some thunderstorm complexes firing up across that region.
How wet has that area been for the growing season?
Well, it's obviously been extremely wet. Running some stats, at least for the past 30 days or so, it has been the wettest, wettest on record. And this is with data going back over 100 years in some of the sections of northwest Iowa and southwest Minnesota. So it hasn't been widespread, but for those particular areas, yeah, June registered as one of the wettest on record.
What do you see? We talked about next week after that. What happens in the second week of July and in the midst of pollination at this point then?
Yeah, for the second week of July, it looks like the primary heat will still stay outside of the Midwest. There are some hints longer term, weeks 3 and weeks 4 of July, of some heat building in, but very debatable at the present time with that.
Let's check some other places across the planet. We haven't discussed for some time second crop or safrinha corn in Brazil. Is that because it made it through the bulk of its growing season in decent condition?
Yeah, they certainly have been pretty good here. And the rain activity here during the middle to end of the season, harvesting starting up here has been very favorable. So just not seeing any signs of issues here, no major rains, or there hasn't been any kind of freeze threats either here for safrinha. So all in all, pretty good shape here entering July.
Turn your attention from South America now to the Black Sea area. There had been a drought. I believe some of that had abated. Can you tell me more?
Yes, there has been, at least going back into late June, some relief in portions of the Black Sea region, sections of the Russia corn and sunseed belt, as well as on into Ukraine. That's now starting to change as the pattern's going back drier and hotter. In fact, a major heat wave is on tap for the eastern part of the Black Sea region, starting the middle of this week, continuing through at least the middle of next week. So we're seeing summer crop stress now rapidly escalate as we move through this first half of July there.
Okay, thank you much.
You're welcome, Todd.
That's Mark Russo. He's with EverStream Analytics, joined us here on this Monday edition of the Closing Market Report. It came to you from Illinois Public Media. It is public radio for the farming world, online at willag.org, willag.org. Just click and play our programming from there each and every business day of the year. I'm University of Illinois Extension's Todd Gleason.